I may not be making a lot of money from trading yet at this point, but what I do in my videos is that I share with you guys what takes me from point A to point B, what I improved on in my technical analysis, my psychology, and in my risk management, and every other thing in trading and business in general. So that's why in this video I'm going to be sharing with you how I do my risk management and the minimum risk to reward I normally take. But before I do that, I want to let you guys know that trading is a personal journey. You don't need to listen and follow what every other trader say, even your big mentors. The reason for that is because the scenario they are in is going to be more likely different than the one you're in. For example, some people are okay with 2 risks to reward, some people are okay with 10 risks to reward, some people are okay with trading 1 pair, some people are okay with trading 2, 3 pair, or even 10 pairs, but it all works for them. So in as much as you are listening to people and taking ideas and insights from people, cut those ideas and insights to your own style of trading, to the way it actually suits your own style of trading. So with that said, let's get into the video and let's get to the business of the day. So for the risk management, we are going to start with a very small account, because a lot of people do not have big accounts and they don't even have problems, right? Even me, I trade small accounts. So let's say we have a $50 account, and then your average risk to reward is normally 5 to 10, because my average risk to reward is normally 5 to sometimes 15 or 17, but let's stay within the range of 5 risk to reward as your average, and then your win rate is 40%. So for the risk management on the $50, we are going to say risking $2 per trade, right? So that $2 per trade, it means that if you take one trade and then you make profit, it's going to be $10 profit, right? Now let's say, since your average win rate is 40%, it means that if you take 10 trades, you are going to win 4 and you are going to lose 6, which is normal. Okay, I've seen a lot of big profitable traders, sometimes they lose 10 times in a row, sometimes 5 times in a row. Losing is part of the business, right? Now let's say you take your first trade, then your first trade actually go in profit. Regardless, since your win rate is 40%, you are going to win 4, you are going to lose 6. Those 4 wins might come 4 times in a row, those 6 losses might come 6 times in a row, but regardless, you are winning 4, you are losing 6. So you made your first trade, which is $2, and then you actually made a profit of $10. Now this $10, what it means is that in order for you to liquidate the money you make from this one trade, it's going to take you 5 times 5 losing trades to actually liquidate the money you just make from that particular win, from just one win. Now let me go to the chart, let me illustrate it to you guys a little bit more better. So here on the BTC chart, some of this trade I share them while recording some of my videos that I normally upload. So you can see that most of the trade actually is my take profit, and you can see that it's from 10 to 15 risk to reward. But just like I said, we are going to stay within the range of 5 risk to reward, because to be honest, some people might actually close the trade before it hits your full TP, and everybody is most people are struggling with that, and at this point I'm actually struggling with that, but I've really gone far in that stage, and my confidence in my trade is actually increasing by the day, right? So let's say you take, instead of closing out in 10 risk to reward profit, you close out with 5 risk to reward. Now you are risking $2, you close out in 5 risk to reward, your profit is still going to be $10, but if you add on to the full TP, your profit will be $20, right? But let's say you close out in 5 risk to reward. Now you've made $10 from this trade, and then you enter another trade, which is this BTC trade. Yours might not be BTC, but I'm just trying to illustrate it for you why it is okay for me to use a high risk to reward. Okay, so it might not be okay for you. You might be okay with staying with 2 risk to reward or 3 risk to reward, as long as it keep money in your account and your account keep growing by the end of the month. then it's fine. If you're okay with the money you're making with it, then it is good. You don't need to change your scale, right? So let's say you take another trade, 15 risk to reward, but for this one you add a little bit longer and then you close out with 10 risk to reward profit. That is 20. So you now make $20 from this particular trade. Now $20 plus this $10 is actually $30. Now you now have $30 to trade with. What that $30 means is that you need to remember that you are going to stay with the percentage you are willing to risk, which is $2 per trade. Now you made $30. That $30 is going to be divided by 2, which means it's going to take you 15 losing trades to actually liquidate the money you just made from these 2 trades, and you didn't even hold the trade till it hits your TP, right? You close out halfway, but you close out in good profit. Now it's going to take you 15 losing trades to actually lose the money you just made from this trade alone, not from your capital. Okay, let's say you take 1 losses, 2 losses, 3 losses, you take 5 losses, your account is still going to be in profit. So if your win rate is, let's say, 40% and your risk to reward is between the range of 5 to 10, then it is very, very okay. Now I'm not saying that if you have a 2 risk to reward trade, that does not mean that you are not good. As long as it fits your style and you love the kind of money you are making from it, then it is absolutely fine. I think one of the advantage of this high risk to reward is that if you have a small account, it helps you to grow the account really, really fast. This is not you flipping accounts. This is just a normal way of trading. So you are not stacking or flipping account. This is just a normal conservative way of trading. So if you have a small account, it's very, very okay for you. But then if you have bigger account, let's say you are risking $1,000, even 3 risk to reward is a lot of money from $1,000. 3 risk to reward of $1,000, that is $3,000, right? So if you have a small account and you are looking for a way to actually grow the account fast and in a conservative way, you don't need to take high risk at all, then improving on your skill to get a higher risk to reward is something you should focus on, because it is actually something that I focused on. If you scroll down to my video way back in 2023 and even 2024, you will notice the difference from the way I trade then to the way I trade now. You will notice the difference in stop loss, the difference in take profits. These are things that you need to pay attention to, and you need to be intentional about improving and working on them. Okay, so having a small stop loss is not something you just get good at overnight. It's something you intentionally try to improve day after day. Okay, so let's get back to the board. Let me draw more illustration for you guys. So you see the little bit of illustration I just did for you guys, right? So the way you can actually balance and the way you can actually benefit from this is by having a good psychology. So I'm done with the risk management class. This is going to be more of what you can do to actually benefit from this stuff. Okay, so regardless of your risk management, regardless of your win rates, the way you actually benefit from trading in general is that you should have a good psychology. And in the terms of psychology, I would say to myself that I've passed, I think, 2 phases of psychology. The first phase, I'm going to be explaining more on this when I make a psychological video. Okay, but let me just tell you this, because this is the only way to actually benefit from this risk to reward. Even if you have 2 risk to reward, this is the way to benefit from it. It's either by allowing the market to eat your take profit fully, or by closing out in a good amount of profit. To be honest, I'm going to say you should allow the market to eat your take profit. Okay, this is a very, very difficult part. This is a very, very difficult part you can actually go through, but if you are determined and then if you are focused on actually improving on it, you can pass it. You can pass it. The reason I say you can pass it is that my first stages of psychology, which was I was not allowing the market to hit my stop loss before closing out. I passed that stage. And then the second stage was that I was not allowing the market to give me enough profit before closing out. So in the psychological video, I'm going to be telling you the stage that I'm in now and how I'm actually looking forward to deal with it and to actually pass this stage, because psychology is very, very important regardless of your risk management, how much you want to risk, or your win rates, your risk to reward, this and that. If you don't have a good psychology, you are not going to benefit from it. All right, so I hope you find this video helpful. Please do well to subscribe, and I'm going to be seeing you guys in my next video. If you watch this video to this very end, I truly appreciate you for staying to the end of this video. Now, if you find this video helpful at some point, do well to subscribe, like, and share this video. So I'm going to be seeing you guys on my next video, and make sure that you are practicing and you are making sure to improve on your skill in the terms of trading and in life in general. So see you guys on my next video. Stay blessed.